company was founded not as a reaction to the CFPB's vendor management bulletin, or not as a reaction to a request to manage vendors. I founded the company after many years as an attorney and regulatory and compliance expert in the mortgage industry, concerned about the lack of controls around the closing table. So my focus was more on loan quality assurance and overall operational risk, not necessarily vendor risk. In fact, the whole issue of vendor management and vetting of vendors is new. I mean, it really came to light when we first started in the industry in 2012. I remember we talked to people about vetting and vendor management, and they had no idea what we were talking about. I mean, certainly at that time, large banks like Bank of America and Wells Fargo and so on had vendor management departments. But your mid-sized regional lenders, your small mortgage lenders, they didn't even know what the term vetting meant. We had to explain it to them. So this is something that was relatively new. The reason for our being and why we came about was because I had seen for years, having been a real estate attorney, that there was this gap in risk management when it came around the closing table. I found it very odd that banks addressed risk very appropriately when it came to originating loans and verifying the borrower and the property address and pulling tax reports and property valuations and getting appraisals and evaluating credit very well. Then all of a sudden it stopped when it came to the closing table. So there was, you'd wire the money to the table, send the documents there. Your note was wet. It hadn't been signed yet, hadn't been returned. And you had very little knowledge or relationship with the people who were managing this. So that essentially the bank had no seat at the closing table. And I thought that was very strange. And so we looked at this and said, how can we make banks more comfortable and confident that once they send that wire, once they send that closing package, that they're not going to be the victim of harm. The victim of harm from mortgage fraud, closing fraud, theft of funds, consumer theft. The other thing that bothered us is that everything about a consumer is available at the closing table and to the closing settlement agents, closing agents. They can see everything: social security number, date of birth, address, assets, everything. And there were no controls around who was handling this. So again, we looked at it and we said, how do we manage this? And the way we decided to do it was to create a nationwide database. Our idea was to become an industry utility, to have this huge database that lenders could check 24/7 to make sure that people were a low risk, that they're properly licensed, properly insured, had successfully passed background checks, were upstanding folks, and that there was not just a snapshot in time, because that is not good risk management. It has to be something that is live and is continuously updated and monitored so that risk can be constantly reassessed. I actually spent a number of years in London working with risk analysts at Lloyd's of London because I felt they were the best risk analysts in the world. And of course, they had just spent millions and millions of dollars paying out claims with the collapse of the banking industry in 2008. And so I went out there at that time and I said, look, I want your advice. I want to see case studies. I want you to help me to understand where are all the pressure points, where are all the weaknesses. How do we build something that if you were to stand behind it and insure it, knowing that you are very risk averse, what could you stand behind? And so I spent literally 3 years or more going back and forth to London, talking to people, and we collaborated together on this process. And that's how we built Secure Insight.